What's going on YouTube? Welcome back to the XForceGlobal channel. In today's video, we're going to be discussing Bitcoin's current price action and see if there has been any changes in the trajectory of our original narrative from our previous videos of a bullish perspective using the Elliott Wave Theory. In my opinion, I think we are at the last resort in terms of any possible bullish support, and Bitcoin certainly needs to move quickly at the current time of recording. I believe the current correction of all the lower degrees, most notably in the primary and the intermediate degree, needs to move quickly. I believe the current correction is pushing the limits not only in terms of the depth, but also possibly in terms of the time correction of the internal degrees as well. It is absurdly frustrating for the range traders, but breakout traders are still in the hopes of a possible push to the upside, and we'll discuss why. And that doesn't go to say that we aren't destroying the integrity of our original wave counts, nor are we really diverting away from having the right look entirely. It just means that we are reaching peak validation for this 1-2 since our last video. And we've been discussing this range for quite some time, and 2 to 3 weeks into discussing the same range does make the markets a bit nervous from a fundamental perspective. You know, they really want the price to go up. But like I said, nothing has been invalidated just yet, but the balance of probabilities does raise the value of what could potentially re-spark some bearish scenarios, which we will also go over in this video from a macro perspective, just to fit in the right look, maybe possibly match the expectations of the fundamental psychological aspect of what the markets are feeling right now. So with that being said, before we start, please make sure to hit that like button and subscribe to the channel if you haven't already. Your support means everything to me, so thank you so much. So right now, what we are currently observing is the same idea of having a wave 1-2. We've been discussing not only going into this Fibonacci level of the 61.8%, but also possibly retesting that 88.6%, which we did, and we got a really nice bounce off of these lows here. And here, it's very tricky in the sense that it's moving extremely corrective, and that does give us the more higher probability for this being a primary scenario still at this current time of recording, where we have a primary wave 1-2 in the making, and we're still working for both the sub-minuet degree to the upside to finish off the larger minuet degree in the blue, which means that we are still also sticking to the overall intention that we are working in a 5-wave manner to the upside, and we are looking for one more potential move to the upside. Now, this is still remaining as the primary idea, but things can change possibly into the next video, but I will do my best in terms of how to narrow down these probabilities. But as you can see here, we did get a nice bounce of a 1-2 here, and we've been just correctively moving, not necessarily impulsive, but moving very controlled in terms of the actual correction. So that means that we still have to stick with not only the idea of having a 1-2, that's why we have to really take the time to really dissect how and what the probabilities may be in terms of how these 1-2s are being built up, because any further in time, it's definitely not going to be giving us, the proper look, especially if we're going to be going into the month of March and we start correcting like this. It's most likely going to be a distribution for possibly a different type of corrective pattern that may have to give us a different shift in where the actual termination points might be, where maybe the fifth wave has already concluded, and we'll go over that in just a moment as well. So with that being said, again, I still do stick to the idea that we may be working in a 1, 2, 3, 4, 5 to the upside. That's just with the current data given, and we haven't really invalidated any major perspective of how this bullish structure could be built up as a 5-wave move to the upside. We really need to move out of here very soon, and we do have a few scenarios that we'll go over in the shorter time frames. So that's one idea. Now, there are some other alternative ideas that we discussed in the previous video, which is the alternative kind of idea where we may be just working correctively to the upside. Now, ideally, again, if we're seeing this as a 1-2, we can alternatively work in a hybrid price action, meaning that we replace the wave 1 as a wave A and a wave B, and we can still be working to the general direction of the upside, but moving correctively in a 3-wave fashion, which means that this ending diagonal will be working as some kind of contracting wedge to the upside, and then we'll have some kind of 5-wave move to to the upside, where most likely we'll have a wave 4 correctively overlap into the territory of this wave 1, and that will be the biggest giveaway that this scenario will become the primary scenario as well when we actually do get a series of 3s to the upside and downside. But for now, this idea does still have the right look, but as you can see, any further down, that's going to give us a really bad look for how this diagonal could also be playing out. But this idea still works in tandem with the first idea in terms of the general direction to the upside. It's just how we're going to be narrowing it down either as a 3-wave corrective structure or an impulsive 3-wave as a 1, 2, 3 to the upside. So if it moves impulsively, we stick to the original primary idea. If it moves correctively and we kind of stall again around these levels here, maybe create a little bit of a distribution range for this wave X, then we'll definitely be in a corrective structure to the upside. Again, the idea of these two scenarios, the second idea and the first idea, is that we're still working for higher levels, but we do have a range anywhere between the $120,000 to the $150,000 levels, which is going to give us a pretty good idea of where and how this is going to be ending if we're going to be figuring out if this is an impulse or a corrective move to the upside. We'll get a pretty clear idea. So that's why these two ideas remain a good probability. Now, there is another scenario that it can be coming into play, which is still working towards the upside, but we won't go as high as, any of those other two scenarios in the current time, meaning that we could still be ranging here that may fit into the overall psychology perspective of how the markets are seeing it. And we're just in a range right now, extending the overall correction for this larger wave 4. Instead of having a wave 4 terminate here or here, it means that we're going to terminate it at a later point. Now, this is a low improbability in my opinion. I think the triangle right now, especially this being a running triangle, is quite rare in terms of, especially with the work of alternation idea, the guideline of alternation. Not only that, we're extending the time of this degree here as a 3-4 against this wave 1-2 that has already witnessed or observed as a sideways 1-2. So we definitely don't want to be seeing this correctively moving to the sideways even longer, although it may pertain to an overall okay look for how this triangle may be playing out. But overall, as you can see on the macro, it just doesn't really have the best look. So it does remain lower in the probability. As you can see here, it just doesn't have the right look in my opinion. But again, it is a probability, but again, we have to do our best as an Elliottician to reduce the probabilities as much as we can. So this idea for now doesn't stick to me or resonate to me as much as the other two scenarios, as both of these scenarios of the first two scenarios lead us towards more upside possibility, and that would be the best way to really resolve this whole range entirely. So again, that is the last idea. And then we have the shorter time frames that we have to discuss, right? Because we want to be understanding of how these 1-2s are being created. And the only real way is, again, this 1-2 that we had, or this bounce that we got off of the 88.6% level, the normal Fibonacci retracement. We do have a pretty clear 5-wave structure to the upside as a wave 1. We discussed this, in our previous analysis. And then this could be witnessed as a WXY. I think we can also see this as a WXY-XZ correction. It really doesn't matter at this point. What matters is we do have a pretty solid corrective channel being created here. The Elliott Wave channel for both impulses and corrective channels usually do have a pretty good say when it comes to creating a corrective channel of what the markets are seeing working in a tight range. And with that being said, we do have a pretty solid range here, and the median line or the middle line does act as support and resistance. As you can see here, this was a really strong trading range, and that's what created so much corrective overlap here. That's why this here, from a more probability perspective, it just looks corrective. No matter how bullish or bearish we may be, we just got to work with what the fundamental and observation is from a wave perspective. And right now, with so many corrective overlaps, is this going to be part of something differently, like part of a different corrective structure moving for a 1-2, 1-2, 1-2 to the downside? Not necessarily, just due to the fact that because of our higher degree, fits better as an ABC to the downside. So we have to work with the hierarchy of degrees, and in this case with the primary degree, fitting into a larger perspective of the macro, this fits better as a primary wave 1-2 instead of building a distribution that could be working for further downside. So for now, either as a WXYXZ or a WXY, both fit quite nicely in terms of the corrective channel. And this move off of here where we try to create an attempt to break out of this region here, we're now kind of retesting this parallel channel upper boundary line. now is pretty much the last resort, in my opinion, either as a possible 1-2 flat. We discussed this in the Discord a few days ago, actually, where we reached the peak top here, and this was the last resort scenario, in my opinion, as well. We had that possibility that I also discussed this on my social media on X, that we may be working in a diagonal. That has yet to be proven, and we didn't really prove that. And the kind of weakness that we got off that rejection at the top could have been a 1-2, 1-2 as well, but again, this move here just looked like it was moving correctively to the upside. So we resorted it down to, again, as Elliotticians, we have to resort and work as best as we can with the probabilities, and it's about narrowing down the probabilities, and that's where the talent comes in. We just kind of concluded that this may be a 1-2 flat, and this here has concluded as the entire 1-2 range here, right? So this is how I would see it, either as a running flat that's looking very soon to be complete if we stay above this wave A, but if we break that origin or a termination point of wave A, could still be turning into some kind of expanded flat, but then we have a very close to that soft invalidation level that we have to be making sure we stay above it. That's why, in my opinion, like I said at the beginning of the video, we're at peak validation. So if we're at peak validation, it means that we really need to be securing even the lowest of the third degree that we're working in, which is this intermediate degree, and we really want to create a 5-wave move in the minor degree in the white to the upside for a wave 3 to complete off some kind of wave 3 to the upside. We really want to be retesting these regions as the first beginning obstacle going forward, and at that point it does really increase in probabilities that we are working finally to the upside. But for now, it's still moving correctively. I think we're in a range here. We're working so correctively, and we're creating a lot of overlaps that this is still the highest probability scenario in terms of having a 1-2, 1-2, 1-2. So that's the first scenario that we discussed, of that wave 4 being complete, and we're looking for further upside. And then we do have another possibility of that ending diagonal, which is the same idea. We are still creating a 1-2 here, 3, 4, 5 for that wave C to the upside. Now, the final idea, the bearish scenario, we have to discuss it now because as time goes on, this range here, this dreadful range now can be turning, and we have to kind of respark what could be the bearish scenario. And that idea is where we have a possible final conclusion of a wave 5 to the upside. Instead of working for a 5th wave to the upside, we could be possibly completed here. And the only way we can do that is by having this as a 1-2, 3, 4, and then that 5th wave has technically ended here. Now, it's not really what everyone wants to be hearing, but it is the sensible approach here because it's the only way that I can currently count it in terms of a bearish scenario going forward. And the only way that we can do it is that we're going to be creating some kind of extended correction here, where this is all a series of 1-2s, just like we're looking for a series of 1-2s here of a bullish perspective. We can alternatively working in a series of 1-2s from a bearish perspective. And what that means is all we have to do is now replace everything with our action area waves that we were looking for 1s, 2s, and to the upside. We now have to look at it from a down perspective. Now, it doesn't have the best look, but when you distribute for so long, it starts to create possibly ranges for these 1-2s, meaning that the beginning structure of this is a 1-2 here, and that is our largest degree that we're working for this wave 3. And that should, technically give us a pretty good Elliott wave channeling perspective if we move down now. And then again, the second 1-2 that we have here, now this is very subjective in terms of the approach of how this 1-2 be created, but we can create an ABC to the downside for the second 1-2. Now, what does help this or support it in terms of the evidence is that we do have a possible diagonal being created here, that all these corrective overlaps is now part of something different, meaning that instead of seeing this as WXYZ or some kind of 1-2 WXY, is now seen as a series of zigzags going into what could be a beginning of a wave 1. That in itself is now the beginning of a possible minor degree wave 1-2. And if we move down, break this level very swiftly, we know for sure, for a fact, that we have to go back to this scenario entirely, and we may be working for a wave 3, 4, 5 of the smallest degree here of a 3rd degree high, right? When we're working with a hierarchy of degrees. So that, again, come down, we'll be creating another 3, 4, and then we'll be creating another 3, 4 of the primary degree and the 5th, and that should lead us into the first wave A or a wave 1 if it's really bearish. So that in the sensible approach does fit into what could be the beginning of a bear market here, where we're going to be working for, around $30,000 to the $50,000 levels at the very minimum of a possible bearish support level. But once we do reach and get a complete 5-wave, we'll have another opportunity for longing these regions here. But for now, this is the only way that I would see a possible continuation of a bearish scenario. But for now, like I said, when it comes to the balance of probabilities, to summarize everything, is that we do have the two scenarios that show us, both from the ending diagonal and also from the impulse idea of creating a 5-wave impulse to the upside, is that we're still going to be working for the general direction to the upside. First, the evidence that we have reached the overall peak validation of the normal Fibonacci support levels at the 88.6% and the 78.6% level. We also had the higher degree wave 1-2 in terms of the Fibonacci relationship between waves A and C reach into that 161.8% level. And then we also had a pretty strong move off the lows here, a 10% bounce or so to put us into that first wave 1, and then a correctively channel here, whether as a diagonal or not if you're seeing it bearishly, but this move here does look more correctively going into a more bullish, a retest of a wave 2 of a primary degree, or C, or wave B, and then we're now looking for some kind of flat continuation to the upside, either as a running flat or an expanded flat to the upside. And that is the only way I can see it, ladies and gentlemen. I think that these two scenarios, either as the ending diagonal or the wave 4 that has completed here, and we're now looking for a 1-2 to the upside, is the way to go forward. Possibly by this end of the week, we'll get a very clear answer, at least in hopefully the next few days even, that we get some kind of resolution of the smallest degree within the minor degree in itself. And then from there, it should be a possible bullish continuation, and breakout traders will be rewarded the most, and the range traders are currently getting the hardest beating of all people who are trading this. And then the last resorted scenario is having a series of 1-2s to the downside, but we're still monitoring this, but it is starting to come into play, and we've resparked this idea that the possibility is there now, increasing, and when it starts to increase in probability by 20 to 30%, this is something that we shouldn't be avoiding, right? And it's all about balance of probabilities. So for now, this is how we're looking at it. Those three scenarios. First scenario being the wave 4 being complete, and we're looking for a clear 5-wave move to the upside, or some kind of ending diagonal that's working correctively to the upside. And thirdly, the bearish scenario. This is the only way we'd see it, and the confirmation definitely would be not only a swift move, but breaking also these lows here. And again, that's how we're going to be looking at it. And just remember, from a market psychology perspective, wave 1-2s, when you're working from a psychological observation degree, these wave 1-2s are never the prettiest. Usually they'll have lower sentiment than the actual low of, or the origin of wave 1, where the price was actually lower. You'll usually see more dreadful investors thinking and rethinking their portfolio position before an actual major move breakout happens. So that's something just to keep in mind as well. So hopefully that was helpful, ladies and gentlemen. Thank you very much. If you're interested in joining the Discord membership, where we do update it far more periodically throughout the week, the links are in the description below. And then there is another way to get a taste of what XForceGlobal that I have to offer as a service, is that we also do offer a Patreon that is updated twice a week. So if you're interested in joining that, link is also in the description below. Thank you very much. If you're not following me on social media, please do give me a follow there as well. Thank you so much. Have a fantastic rest of the week. Bye-bye.